From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 1st, 2017. Today we're going to be taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. But before I begin with our chart analysis, it's important to recognize that in about 35 minutes or so from the recording of this video, we will have some significant news out of the US with earnings and non-farm payroll information out of the US. Depending on how that information comes out, if it's very positive for the U.S., we'll look for a surge in favor of the U.S. dollar. If it's very negative, of course, we would look for a U.S. dollar sell-off. So all of this could change. Everything I'm saying here in this analysis could change in the next 35 minutes or so, depending on how that news comes out. So you want to make note of that and prepare for that. If you are in trades prior to that news, you'll want to protect yourself from significant loss by using appropriate risk strategies. Of course, as you get into new trades, you want to use appropriate risk strategies as well to protect yourself in case the market doesn't do what you or I think it should do. Let's get started here on the yen. We're looking at the daily time frame. Everything to the right of the vertical red line on the left hand side of the chart is basically 2017. That's January where the red line is. So everything to the right is basically 2017 contained within a fairly large range in the blue box that you see here on the daily time frame. The trend lines really show what's been happening most of the year. It's been falling from the top and rising from the bottom of this range. Probably the most important part about that is that currently we're down closer to the bottom of that range. So if we see any positive movement for the US dollar, it's likely to continue this pattern, which would be a rise from the bottom and go right back up to the top of the box. Now, if we see negative news and we see any sell-off of the US dollar, if it ever breaks down through the bottom of that, which is close to the 108 level, we would look for a reversal and a turn, or at least a continuation of the current downtrend, which is the blue trend line on the right hand side of our range. So just an interesting way to look at the wider picture here for the US yen. Now let's begin to zoom it in here a little bit, and we can see over the past several weeks we're in a downtrend back to the bottom of the range, but we've been in this area down here where it's been in some congestion, maybe even a shorter term range. If I was to take one of these black boxes, I could even widen it out like this and say we've been in this area for quite a long time, just bouncing around between the pink, yellow, and purple shaded area. Purple zone being support, it has now broken through the blue trend line, and we're sitting above the yellow zone. So the last time, the smaller black box there represents the period where we were in between the yellow and the pink shaded area where it was bouncing around in there. Well, most importantly, we're in that area again above 110, and of course the pink zone is 110.65.90, but we're above 110, 109.75, the yellow zone. Just like back here, we would expect support into this area, getting back above it. This area where the lower black box is, in fact, let's change one of these to a different color so I can talk about it. The blue box now shows us where the market was in support at the purple zone. We've now broken back above the resistance that was inside that blue box. Resistance here now becoming support. So for the day today, and if news comes out positive for the US dollar, we're going to look for support here and a return back higher. We're going to look for it back to the pink zone, or we're going to look for it even higher than that. But the first resistance we come to is the pink zone. So that's assuming we get positive news. Stays above the yellow zone, goes back to the pink zone or higher. On a negative move for the US dollar, a sell-off of the dollar, if it's negative news, we're back down towards the purple zone. Of course, clearly is our first support. We've seen that over the past few weeks, and even a dip down to the orange zone at the very, very bottom could happen if it's significantly negative. So yellow zone's our main area to focus in. 110.10, 109.75. Above it, we look for the market to go up. Below it, we look for the market to go down. But I think right now, some of the signs we're seeing with this sudden infusion of buy orders that we saw a couple of days ago above the blue trend line, we're actually above the 236 fib of the blue trend. Top to bottom of the blue trend with Fibonacci puts the 0.236, 109.73, or we're above that. We challenged yesterday the 382, 110.64. By the way, the 618 fib sits all the way up here closer to where this blue zone is into the 112 level. So quite a long ways up if it goes all the way to the 618 fib of the blue trend line. And of course, if it goes to the 786 or 886, we'd be back up to the top of our range and the top of the trend. So very interesting information there. I think we want to watch the yellow zone today, watch our news, and see how the U.S. dollar fares after non-farm payrolls today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.